President-elect Biden is unveiling his stimulus package tonight, expected to be at $1.9 trillion. We're going to be looking at why the stock market is selling off because of that. Fed Chairman Jerome Powell also spoke today, calming down market fears that the Fed might be looking to cut off QE anytime soon. We're going to look over here and see how the 10-year is reacting, why, how the dollar is reacting, why, and what's going on here with gold and silver and what might be next. That's the focus for today. If you're new here, welcome. And if you're not, welcome back. This is Jordan with Conquer Trading and Investing. We're going to start over here with President Biden's stimulus plan. He's looking at unveiling a $1.9 trillion stimulus plan. He's talking about, and the markets didn't like this part, he's talking about stimulus checks going out to the people being about $1,400 as opposed to $2,000 per person, saying that the last package included $600. Add them up, you have $2,000. Market not really liking that, but overall, that's going to be massive inflationary for the economy, as we've seen ever since the Fed first acted at the end of March in 2020. What is happening next? Why are the markets reacting, selling off here? And what do we think is going to happen next? First of all, let's start off with the DXY. We're going to start with the dollar. Of note, you could see that right now the 10-year is rising as this 1.9 stimulus plan is being proposed. By the way, do you think that that plan is going to be passed just because President-elect Biden is proposing a $1.9 trillion spending package? This is coming right after a $900 billion package was just passed. Do you think that he's going to have the support, right? Do you think he's going to have the Democratic support enough to get the votes? That remains to be seen. By the way, the market might have this whole carrot in front of us, which will help propel markets up. But if at any point in time the markets are disappointed, that could cause something that we're watching out for, a correction. Now, generally, a correction on the S&P is about a 9% drawdown from the all-time high or from the recent high. And you can see over there that would currently take us, let's take a look at where it would take us. Look back over here, 9% drawdown would take us. I'm looking to see if there's anything technical that would take us down into. And that's an arbitrary number, 9%. On average, that's considered a correction. You can see over here, technically, we have nice support at 3,400 over here, 3,418. That's pretty strong support. This trend line over here, by the way, this was very strong resistance, this triangle pattern that we broke out going right into the election. Then price started running up. You can see that we then retested that broken trend line over there, came up and formed another consolidation triangle pattern, broke out again, formed another consolidation pattern, broke out again, right? And here we are right now. Look, let's extend this line down over here. Let's just go ahead and leave that right there. That could be an area of support going forward that if we were to sell off, we could lean into. Am I calling a sell-off in the equity markets right now? You all know that I do not look to pick tops or anything like that. Right now, we're going to watch how the markets react to the news. What is the news? The news is that instead of a $2,000 check that Americans will be receiving, and I don't know which Americans are going to qualify. You know, I don't know if it's every American or if it's households making under a certain amount of money. We're going to see, right now we're just seeing headline numbers coming over the wires. New York Times leaked the $1.9 trillion stimulus plan. We're going to see later as President-elect Biden speaks, right, what happens next. This is just the first step. We're going to see lots of negotiations take place before we see any type of final package that's going to be settled upon. Over here on the S&P 500, we could see that so far, after pulling out of this bull flag over here, right, we're just coming back in for the retest right now. That's entirely bullish, right? Should we call a market crash? It's entirely bullish over here. You can see over here the market has broken out of the bull flag and is coming back down and retesting it. Two things could happen. If we hold over here and resume off, that's an entry, right? Or what happens over here? Look, maybe we come back down into that bull flag. We'll be looking for support over here. Fall below this last trendline support of that bull flag, and then we're looking for a deeper correction, whether or not it takes us into this area over here of 37.33, which is now support, or a little bit further, 37.14. We don't know yet. We'll have to watch and wait and see how price reacts. What happens if we fall back and test this support line over here again at 36.40? Do you think it'll hold that time? I don't know. We'll have to wait and watch. We're not going to take it any further than what's happening in front of us right now. I can see on the S&P 500 that all that's happening right now is that we're currently coming in and testing that broken resistance of the bull flag. And now that we're looking to see if that holds that support. If it does and we start resuming off here, that is a bullish buy entry on the S&P 500. Let me jump over to the Russell because the Russell was breaking outside of this trend line earlier this morning, trying to see whether or not this was perhaps, right? This was perhaps a rising wedge forming. If that were to form, if you do consider that a rising wedge, and it looks exactly like one to myself, after breaking out here to the upside, if this is faded and we break down on the upside, look for a significant correction on the Russell. Significant. What do I mean by significant? Well, let's go ahead and take a look over here, right? We would be looking at least a 6.5% correction, probably even closer to an 8.5% correction. Let's watch the Russell. Let's see what happens. However, right now it's breaking out to the upside. It still has the potential to hold. You could see over here price closing here outside of this rising wedge over here. It has the potential over here to keep going as this stimulus is being discussed. I think the stimulus is a wild card. President-elect Biden is coming out there with a high number, $1.9 trillion. And I'm not sure why. Well, listen to me. I have a feeling about this one. I feel that they're coming in high, and I feel like they're coming in too high, knowing that it's not going to be approved. Let's see how we'll see how this develops, and let's see how the market reacts to it. Let's check out the Nasdaq over here, right? We can see the Nasdaq over here. A lot of people are still watching this trade over here. Entry yesterday came into the resistance, and now we're trading below entry. Original stop in place, coming into this area of support over here. We will see if this area holds. If this area of support does not hold, stops will be taken out. What about on the Dow? Not much to see or do over here. Dow, by the way, unable to go ahead off the $1.9 trillion stimulus trial balloon, was not able to go ahead and make new all-time highs. Same thing with the S&P 500. You could see the lower high being put on them both. Is that a warning sign? We just have to pay attention to what's happening over here, right? So far, on all the indexes, we have not seen any type of technical breakdown whatsoever. Let's see overnight how the market reacts after President-elect Biden gets to go ahead and present his case, and then we will see how the market reacts. That's what's important. Tomorrow morning, we'll have a much better idea of what is next. Let's move back over here to the 10-year Treasury. We can see right now rates are rising. Why would rates be rising? The government's talking about taking on massive amount of debt, right? Hyper inflationary, all this stimulus that's being, let's say, proposed. And we could see already, we know already, here's the commodity index over here. You can see this is already broken out of a descending wedge over here. We are seeing inflation take place, and that is a trend that we're looking to continue. So you could see rates, the market going up here, the rates are starting to rise. Now it's my, let's say, my impression, my thought, my thesis, my belief that this is all noise, because the Fed is going to have to step in and squash it. The Fed's playing a game right now. What is the game is the Fed playing? First, you saw last week JP Morgan talking about by June the Fed is going to look to taper. The Fed can't taper. We already knew that. We already said that, right? Playing games as yields start falling, all of a sudden, the Fed's going to taper their QE. It's impossible. They can't. They got to keep the game going. We all know that. Right? So then what happens? You start seeing yields rise. And then what happens? Well, you have today the Fed Chairman Powell speaking, saying, no, listen, we're not ready to have that conversation anytime soon. Of course they're not. They can't back away. The last time the Fed backed away and then started tightening, it caused a massive dollar liquidity crisis. They know they can't do that. They got to keep this charade going. Game of charades, that's what we're looking at over here. But over here, the market right now continue to rise here, knowing that we're talking about taking on $1 trillion of debt, stimulating the economy. That is going to be massive inflationary. Rates are forced to rise, but the dollar's not. The dollar was rejected over here at this resistance over here after breaking out of that bull flag, that downward sloping channel. Price came into the resistance, and the resistance held, and price is back into that channel. Continue watching that line. If we cross above 90.57 and then able to confirm that into support, then we could see a bit of a move in the direction of the dollar coming into this trend line over here next. That would be what we would be targeting, right? But right now the dollar is having a lot of trouble doing that. Why would that happen? How is that possible? Yields are rising. How come the dollar's not? Because we're talking about the government, the U.S. government taking on massive amount of debt. Is going to continue to devalue the dollar, right? We have a race right now, a race between all fiat currencies trying their best to devalue against each other. Gold and silver, what are they doing, right? Gold, right? This is actually this was pointed out by Will, by the way. If I come out to the 3-day for you, you could see over here, I'm going to just draw in this trend line really quick. You could see that currently what we're at right over here. You can see that we're holding over here, this trend line over here. One touch, two touch, three touches over here, and into that horizontal resistance over here at 1820, 1818. Let me come back into real time over here. You can see over here this support over here at 1818 is currently holding. Now for me, I'm not interested in taking this trade right now. You do have yields rising. That is not really conducive for gold rising at the same time. However, I'm going to continue to follow what happens here technically. If I get a breakout of this trend line at any time, that's going to set up the opportunity for me to take another poke at going long on gold here. I think that gold, and I've said it before and I remain firm, 2021 is going to see gold print new all-time highs, right? What we're seeing right now is a bunch of noise, gold and silver under a little bit of pressure. That's all going to change. Here you can see over here, silver again into 26, the resistance at 26. Get above that. That's for the aggressive trader to start going long on silver. Get above this right now. You can see this line over here has become the resistance line over here on silver. I should go ahead and make that line silver, knowing that when we get above it, that's going to be the safe time to attack on silver, looking to take out the 2020 high, and then perhaps even looking to go above and, I think in 2021, good chance that we go out and make new all-time highs on silver. That's what I think we're looking at right now. So right now, just be patient on gold and silver. They are not in play right now. We are momentum traders. We don't chase after momentum. We're preemptive of momentum. We're looking to trade the sweet spot of a trend. Right now, both gold and silver are trying, or they're struggling here. They continue to consolidate, but trying to go ahead and start getting back into this uptrend of this bull market that they're both in, but not yet. You can see gold had a fake out over here. Wait for it to break the trend line again, then's the time to attack. Not going to be looking at Bitcoin or Ethereum this update. Nothing else to add to that conversation. We're all on autopilot over there. The most important thing to watch right now is how the equity markets react overnight after President-elect Biden gets to speak, and see how the markets react. Then we'll take it the next step. But right now, the main thing to relay to you is that the markets have not put in any type of bearish, negative technical breakdowns whatsoever. It is of note, once the trial balloon of $1.9 trillion was leaked, the market's not really so far reacting favorably. Now that's either because they're not happy with the amount of direct stimulus going to the American people, $1,400 instead of $2,000, or because they know that this does not have a chance of getting passed. We'll go ahead and we'll continue to monitor the situation together, and we'll be there together to go ahead and trade it. It is interesting to note that we're seeing right here yields rise, 10-year rising, while the dollar's falling. We'll have to keep track of all of that. Tomorrow morning, we have a live session. Friday, Ask Me Anything live session. It's going to be fun. After we go overhead and do a review of the markets, we'll be able to open it up, take a look together across the board, and see how where that flow takes us. For now, I wish you all a beautiful night, a beautiful day, wherever you are, and I'll talk to you soon.